U.S. stocks ended mixed on Friday, with the S&P 500 and the Nasdaq both recording their second straight week of declines. The Dow added 0.3%, while the S&P dipped 0.1% and the Nasdaq shed nearly 0.7. It was the first time this year that the Nasdaq notched two weekly losses in a row. Inflation data on Friday showed that the U.S. Producer Price Index climbed 0.8% in the 12 months leading to July, a higher increase than what economists polled by Refinitiv had expected. Adam Coons is Chief Portfolio Manager at Winthrop Capital Management.
And so we're still seeing some mixed data around, what inflation is doing, and then what that in turn will mean the Federal Reserve will do here in the future. So I think that the thought today is that the Federal Reserve is going to keep interest rates at these elevated levels for a much longer time period. Really, the impacts that will have on stocks could be negative here in the short term.
A rise in yields on the two-year Treasury note, which moves in line with near-term interest rate expectations, weighed on big tech names, as high interest rates could slow the economy and make it harder for them to hit their growth projections. Shares of Tesla and Microsoft both closed down. A more than 3.5% drop in NVIDIA shares weighed on the semiconductor index, which posted its eighth loss in 9 sessions. Among other movers, shares of News Corp rose more than 4.5% after the Rupert Murdoch-owned media conglomerate beat quarterly profit estimates thanks to its cost-cutting efforts. And U.S.-listed shares of Chinese companies Alibaba and JD.com fell as Beijing's latest stimulus measures disappointed investors, while fresh data showed that the country's economic recovery was losing steam.